So in the markets right now, 2.4 on the 10-year. Bill Gross says, oh, now we're going to be in a bear market. What does David Solomon of Goldman Sachs say?
Look, markets are reacting pretty well at the moment. We've got pretty good economic growth all over the world. And actually, if you step back and you think about 12 months ago, the expectation for growth was not as strong as growth's actually come in. So the U.S. doing pretty well, Europe doing pretty well, Japan even doing a little bit better. We're in an economic environment at the moment where the economy is really helping to propel markets. And with the significant amount of monetary policy that's still in place, that's leaving people to continue to invest and shift money into markets. And that's a delicate balance.
But then there's some concerns. David Costin, who leads equity research over at Goldman Sachs, had a really great note out. He said clients keep asking him all the time, when will the rally run out of steam? What do your clients ask you about that?
Well, our clients certainly are interested in our perspective on markets. And one of the things, to remember when you think about markets, there's no question it's been quite a rally, but you could go back and you could look at 1997, as a data point.
And do you want to compare yourself to 1997?
Well, I don't want to compare to 1997, but just from a market data point, you go, look, a lot of the sentiment that people had about markets then is similar to some of the sentiment today, and yet the market ran, for a period of time. Equity markets ran for a period of time. Look, it's an interesting time because you have kind of this base of solid economic growth, but there's no question the cycle's been running for a long time. So I think you have to be invested, but you have to invest cautiously.
So a client comes to you and they say, I want to do this deal, but this worries me. The fact that we're at 2.4, the fact that the Fed may raise rates, the fact that we're at all-time equity highs, we might have a downturn. What do you tell them?
Well, it depends on what kind of client you're talking to and you're looking at. If you're talking to a client that's looking to do something strategically, strategic transactions that really are transformative or significant for companies, are made with a long-term view, with a long-term thought process. They're generally not affected by short-term market activity. And so, a big corporate that's looking at something strategic, you're thinking about a bunch of broader issues and giving advice around that transaction. If it's a capital raising, if you're a company that's in need of capital, you have refinancing needs that are coming up, I think the advice at this point in time is get it done. The markets are quite receptive. Get that stuff done, because you don't know whether or not the markets are going to continue to be as receptive as
So if you're saying get that done, does that mean that Goldman thinks that we're going to be in a higher rate environment, more of a hawkish Fed environment?
Well, get that done means that you have a very inviting market right now for financing activity and the variety of things that could make the environment less inviting, at some other point in time. With respect to the interest rate environment going forward, there's no question that if you look forward, we're going to be in an environment where this monetary policy that's been in place is going to unwind. The question is not if, the question is just when, how, what's the process. So yes, I think over time there's going to be a bias toward higher rates, but how that happens and how it unfolds, yet to be seen.